Ayo, we got the real deal here. It's going to be, what is it, earnings season? What's that thing everyone pays attention to 4 times a year that seems like it's always happening? Yeah, you're right, it's earnings season. I want to give you 3 setups that you can look for during earnings season for your trades. Now, obviously, these are volatile events at earnings. You're going to get extra price movement. You can throw out the relative volume out the window. You can probably throw out the regular ranges out the window. So it's all about finding something that works for that new paradigm, which is a little bit of extra volatility. So first things first, it's got to be out with the old and in with the new. And what I mean by that is I want something trading after earnings, ideally in a new price range. So that sets up a consolidation breakout setup. I have a great example of one here with AAPL. So number 1, consolidation breakout. You got to break out from somewhere. That's where it starts. What is the key price level, and is it obvious and determinable? In this particular case, when we come to the daily chart of AAPL, it's not rocket science. I can zoom it out a bit so you can see you were reversing a big downward trend. You're making some higher lows, and going into earnings, you were bouncing and pressing back through the 200 into this resistance at about 1475. So that's your level to break it out. So that's the first thing I want to look for. Okay, do you have a level that can break out? The second thing you want to be able to see is, okay, did we actually give a consolidation into it? Did you go sideways? You don't want to be flying into that level and give a chance for profit takers. Well, were you consolidating into earnings? Last couple of days, answer yes. You had a tight range, actually selling a little bit in those last 2 days. So when the report is dropped, you're falling back into 14 in that nice little tight range underneath that resistance level. And then when they release a report, there's your move up. It actually stops right before the open of the market at that same resistance price. So that is an ideal breakout setup. And the best thing about a breakout setup in a stock that has a chance to trend, because that's what you can do after earnings, is look at that breakout price. Remember we said 1475? Zoom it in here. Breaks out 1475, makes a fresh high 15.25. Look at the dip. That's 1480. It dips right back into that previous breakout price. This is why, when in doubt, zoom out. If you're looking for a place to buy dips in an upward trend, have a good look at previous resistance turning into support. And the more significant the resistance was, the better the support might be able to be. So AL is number 1 on the list. Number 2, I want to come out and show you like a day 2 continuation play. So everyone's always interested in, okay, well, what do you do on earnings? There's an example of a breakout trade, but sometimes, like, what do you want to look for on the second day? You want a stock which is going absolutely nuts. ASML was up 10%. Anyone watching the chips knew that this was an absolute rocket ship post-earnings. All you see is this thing fly, 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 eagle, fly. This Eagles didn't really fly this year. But this name was super strong in yesterday's trade, and today you got the continuation. Monster gap up, consolidation break. So what am I looking for a continuation play? Well, look at that close. At the end of the day, closed right around the 845 to 850 level. So there is your consolidation. The next day, we're up, we're holding above that price, and then you look at the previous range top. There's your top at 865. It breaks out into it. There's your up move. There's your pullback right into that 85 level, and then your breakout. There's a couple of ways you can play that continuation. Now, you can blindly sort of jump into this thing when it holds that previous high. The other way to play this, which sometimes I'm going to prefer, would be a break of the top with a stop to that previous high for the continuation play. So you're just saying, hey, look, if investors like the earnings enough to go ham long side the day before, why not look for this one to take the stairs up again? Show me confirmation that you've held previous close, that's step 1. Show me confirmation that you've broken previous highs, that's step 2. Show me consolidation above that high. Now you have 3 bullish things that have set up for you on ASML. Market opens, grip it and rip it to the upside. Sometimes it's just as simple as the trend is your friend. For a couple of days after earnings, maybe it's 1, 2, or 3, you're going to get a little bit of extra volatility. So just because the stock was good in day 1, it might not be as good day 2, but you should try to anticipate you're going to get a little extra movement and try to take advantage of that movement by looking for setups on day 2 of earnings. So for everyone that's looking at Tesla tanking as we're taping this today, then understand that day 2 is probably going to provide you with some outsized opportunities. I got another one for you because I mentioned Tesla. And the last one I'm going to use, I was short a lot of EVs today. But one of them that I got out of, and it was because of the setup after the fact, that I'm going to talk about the false break setup. Now remember, both those other 2 trades were going with the earnings move, and they were going with the trend that morning and overnight. So you were continuing that trend. The trend in Tesla, down on the daily chart. The trend at the open was already trading down, gap down, already trading down. So with the trend would be short. That's important because a false breakout in this particular case is going against the grain, right? Like the false breakout at the high of the day in a strong stock is a tricky trade. It can be a good one, but this is a false break up on a stock which is headed down. So it's a bit different from what you're accustomed to when you're thinking about false breaks. So first establish a level. What level is breaking? The answer here was 191, and I'm going to zoom this chart out a little bit so you can get a better idea of why that 191 matters. So you had a trend down on Tesla. This is the October low right at that 191 level. So highlight to that level right away. What happens at the open? You get several tests of that level. Ignore the dark pool wick. I know this move was to 75. I was in it. This move was to 190.75 as well. I was in it. It then broke the 191 in earnest. Got all the way up to 193. So carries the entirety of the pre-market range to that point. It carries higher. Then look at the hammer back underneath. On a 3-minute chart, it completely rejects that. That's almost a $2 wick that you have, a $1.50 wick as it rejects that low. Now, you ask yourself, is it easy to get that short up there? You can layer in. That's one way to get into it. You can try to jam it on the way back down. But I'll give you a second. If you don't get this back underneath the 191, what's the other way to play it? Play trend underneath that resistance level. So there's your false break. The second time it goes there, it tries to get back to the 191. It gets to 190.5, and then it trends down. Remember the anatomy of what a false breakout is at its core. There's some people that are looking for Tesla to rebound. There's always buyers in Tesla, or a lot of stocks. When it breaks that 91, there are people thinking that is a relief rally long side. It goes in the money, $2. There's probably people adding, thinking this is a rip-your-face-off rally for Tesla. So not only have you gotten some shorts out of the trade that were holding overnight, that have been trading trend into earnings, you've also got people that have just entered into some long positions as day traders. So you have a lot of pressure on this stock if it ends up breaking lower and continuing lower. That's the value of a false break. You've trapped people in the other way, and you've relieved pressure as the stock goes down, because if some shorts have covered, that means less people on the bid as it continues to flush, and it did. And one of the reasons why I can tell you this is I was out of my short. Win's a win, but I was out of my short on the false break, and this is the reason I wanted to point this one out. So a couple of things to consider with this. It's a false break up, but it is with the general direction of both the trend overnight, post-earnings. It's also the daily trend was to the downside on Tesla. So you're going with the grain when you're taking this false breakout to the downside when it comes back under. So the first one, simple consolidation breakout. You saw the example with AAL there on earnings. You got the day 2 play, gap and go continuation, ASML, perfect example of that. Then you've got a false breakout in the direction of the trend, failing a high when the stock is a short. The reverse of that, of course, would be, hey, if a strong stock that had positive earnings gapped up, you'd look for a false break of the bottom. So there's 3 opportunities for you, 3 things to look out for during earnings seasons, defined setups that you can then find out in the wild and hopefully take them to the bank. So there you go. That's the real deal. Good luck with trading as always.